Do you ever get the impression that like as soon as portfolio update time comes, some higher powers at work in the stock market just decide to spring into action and mess everything up for you?
Yeah, Elon, it's the NASDAQ here. Yeah, I'm good, man, I'm good. Yeah, listen, I'm having a good month, but it's portfolio update time for some of these guys. Listen, I was wondering, can you, like, I don't know, put a tweet out just saying, I don't know, Bitcoin's really high priced, or Tesla's having some production problems? All right, sounds good, man. Great. Speak to you next month. Have a good one.
I don't know, man. Welcome to Millennials with Money. I'm Johnny, and today's video I'm giving you the February 2021 update of my Trading 212 portfolio. We're gonna follow the usual format, give you a bit of stock market news, have a look at the position of each pie, have a look at the winners and the losers, and in this episode I'm gonna show you what's inside my speculative investing pie that I briefly highlighted to you at the end of the last update. So let's get right into the video. So what's been going on in February in the stock market? Well, first of all, the Redditors are back at it again, planning to buy certain stocks, targeting stocks to make extraordinary gains and beat the system. So yeah, adding to market volatility and affecting the prices of several stocks. It's also earnings seasons for a lot of companies now. As the year 2020 is closed, a lot of companies now have their final numbers and are starting to present their full year results to investors. So of course, a lot of companies have seen stock price movements as a result of overperforming or underperforming versus analyst expectations when it comes to their earnings and 2020 results. And of course, we can't forget Bitcoin. Elon Musk, of course, buying about $1.5 billion worth of Bitcoin with Tesla's cash reserves. And let's not forget that just a few weeks later, he would unleash his Donald Trump-like Twitter powers, saying that Bitcoin was overpriced, and Tesla, the Nasdaq 100, and the overall stock market started to go down as a result. As a result, on social media, we saw a lot of this.
Oh my God! Okay, it's happening. Everybody stay calm.
What's the procedure, everyone? What's the procedure?
Stay calm!
Follow me on TikTok, by the way, you'll be entertained. So that's all from the stock market news, so let's go over to Trading 212. I'm gonna look on my phone today, give you guys a new format, see which one you prefer out of the computer or the phone. Let me know down in the comments, and let's get over to Trading 212. So here we have the mobile app, guys. I'll walk you through each one of the pies very quickly. So you can see the ETF's pie is down, Euro Stoxx pie is up, and the speculative investing pie down quite a bit. So let's have a look at each one and see what happened. So the ETF pie, 145 euros invested. Remember I said in the last video I was going to increase the amount that I invested weekly into this pie. So I'm now investing 25 euros a week into the ETF's pie. And the reason for this is that generally over the long term I would expect more stability and that it would outperform the Euro Stoxx pie. Obviously not the case in February, but I guess we'll see over the long term. And long term, we would expect it, to outperform. Value of the pie is 143 euros and 64 cents, which represents a 0.94% negative position today. Still no dividends in this pie. There are a couple of dividend paying ETFs in here, but none of them have paid out yet. I haven't added any new ETFs either. So if we have a quick look down and we'll see what is holding the pie back. And you can see there, so Far East excluding Japan, the all world ETFs, and primarily you look down at the bottom here, you see the iShares tech stocks and the Amundi Nasdaq 100. So of course that related to the US markets trending downwards at the very end of February. So yeah, not too much to mention for the ETF pie, down mainly because the major US indices have been down at the end of February as well. Over the long term, of course, we would expect that to recover and do well. Now we go into the Euro Stoxx pie. So here we can see 150 euros invested, 10 euros sitting in cash. I found out what the thing is here, why the cash stays here, and it's based on the number of slices you have in the pie. So the more slices you have in a Trading 212 pie, the greater the minimum investment requirement is for the investment to be able to take place in those smaller slices. So Trading 212, I apologize for the hard time I've given you over the past month. Thank you for clarifying my understanding. And yes, so in terms of the value of the pie, 161 euros and 28 cents, which represents a 0.65% profit at the moment. Looking at the dividends, so a total of 54 cents in dividends. I received one dividend in the pie this month. That was from Sage Group, and that was 18 cents. So that was nice. Now, if we look down at the holdings, you can see it's a bit of a mixed bag. We got some winners, got some losers. So let's have a look at the winners first. So first of all, we have National Express, which is up 19% overall. It was up 29% at one point, believe it or not. But yeah, definitely one of the major risers on the FTSE index is National Express. And the reason for National Express's share increase, I believe, is a multitude of reasons. The first is that a lot of analysts have increased their target pricing for National Express. Previously, it was around about the £2.70 mark per share, and a couple of analysts have increased it to £3.30, £3.50. And these analysts have reiterated the strength of the company's operating model. They believe it's going to have a very strong recovery this year. The next winner, we have another one from the travel sector, is Accor Hotel Group. So up about 15% on that, which is really good. They had their results day recently, and they recorded about a €2.5 billion loss, which I mean is to be expected. Nevertheless, the CEO is very confident of the recovery that Accor hotels will have this year. It's worth noting as well that they have about 500 hotels in their construction pipeline, including a Pullman hotel in Manila in the Philippines, and also a range of hotels in Latin America. So some big investments from Accor that should pay off over the long term, and coupled with the recovery of the travel sector, hopefully this year, that should give some nice results in the future. And the final winner I'm going to talk about this month is Total, so the French oil company. Again, a couple of factors in play here. The first being that the price of oil is now back on the rise. So obviously with Total's revenue and profits being linked to the price of oil, the stock will also tend to move in a similar direction. So that accounts for part of its movements. And Total also released their fourth quarter revenues, which were up and giving them a nice little boost as they announced their full year numbers. Analysts believe that they have strongly outperformed competitors such as Shell and BP. And they also haven't cut their dividend at all throughout the pandemic. So reiterating the financial strength of the company. And they're also nicely ahead. They've made good progress on the transition away from oil and gas towards renewable energy. So really bright future for Total. For me, one of my favorite stocks to hold actually, and I'm very, very bullish on Total in the long term. Now let's have a look at some of the losers. So I've got two that I'm going to talk to you about. The first one being Red Eléctrica Corporación. If you remember, in the past I've compared this to National Grid in the UK. It's kind of the company that maintains and operates the electricity infrastructure here in Spain. So they released their earnings this week, down 13% as a result of transport mobility restrictions. So if you think across Spain, this infrastructure is going to cover transport like local metros in big cities like Madrid, Barcelona, Valencia. It's going to cover the Renfe high-speed train network that runs across the country. So of course, with reduced trains and local public transport operating, stands to reason that the revenues of the company would go down. So that explains the drop in their share price. They've also cut their dividend from €1 per share to 80 cents per share. And the reason for that is they're going to be putting a lot of finance towards a 5-year investment plan to upgrade and renew the transport energy infrastructure. So of course, some of that money from the dividend is going to be used to finance that. And the other loser I'm going to talk about this month is Ahold Delhaize. So if you've seen my video on the Dutch stock market, you'll know that Ahold Delhaize is a holding group for various supermarkets in Belgium, the Netherlands, Eastern Europe, and the US. They actually had a pretty good year in terms of results. They increased their revenues, they've increased their profits as well. But in terms of earnings per share, they were down versus analyst expectations. 53 cents earnings per share versus the 60 cents that analysts expected. So as a result, the stock went down. Nevertheless, for me, Ahold is a very stable company, has very bright prospects over the future. They highlighted the growth in online sales in 2020 and that they expect that to increase even further in 2021. So as a digital shopping business, I think great potential going forward. All right, guys, so now let me show you the speculative investing pie. First of all, before I show you the companies inside this, I want to give you a bit of the reason behind this. So as you have seen from my previous investments, that I'm a pretty conservative investor and I'm a dividend investor. Nevertheless, there are loads of great new companies popping up or even already on the stock market that have huge potential for big gains long term. Yes, they're higher risk, but I thought to myself, I want in on this. So I'm only putting €5 a week into this pie. As I said, the majority of my returns, I want to get them from dividends, from stable stocks. So if I make returns from some of these more speculative companies, then great. And even if I don't make great returns on these big stocks, it doesn't represent a big percentage of my portfolio, and I've still got my dividend stocks that give me nice returns for the most part. So now let's have a look at the two companies which are in here. Are you ready? Here we go. So we got two for now. So the first one we have is DocuSign. Now DocuSign is a platform which enables the digitalization of contracts and signing contracts. So back in 2019, I had a brief period where I moved back to the UK for a couple of months. And as I needed to sign a rental agreement from France, DocuSign was actually the way that we did it. So the landlady uploaded the document onto DocuSign and I signed it from France, agreeing to the terms, and when I went to the UK, my contract was all sorted. I've also used DocuSign to change electricity provider where I couldn't go to the office of the company that I was changing to. So you can see how it really facilitates the signing of contracts, especially if you think about people who are moving house between countries, or if for whatever reason you can't make it to the physical office or meet in person to sign a contract. So I think this is a great concept. It has great potential, not just from person to person, but imagine if businesses start adopting DocuSign, if institutions in different countries start adopting them. Could you imagine if in countries where there's a lot of paperwork, imagine if these countries and some of their institutions get away from paper-based administration and move into the digitalization. That's a huge opportunity for DocuSign. And looking at their revenues and their figures, their client base is constantly growing, their revenues are growing as well, and they're also putting more and more money into marketing. So I think the business is only going to grow going forward. So yeah, a lot of potential. And the second company you can see there, everybody's favorite, Tesla. So I've been keeping my eye on Tesla for a while. I've been telling myself, man, I need to look into Tesla, need to have a look at it. And every time I would postpone it and something good would happen and the price would go up. Then Mr. Elon Musk decided to buy a load of Bitcoin for Tesla. And at that moment I was like, right, I gotta get in. I gotta get in on Tesla, even just put a little bit in. And knowing me as an investor and seeing the previous investing decisions I've made and how meticulous I am in reviewing the financials, this was quite an impulsive decision for me. So why? Why such an impulsive decision on Tesla? Simply put, Elon Musk. Like, think about it. The guy has some pretty crazy ideas. Like putting $1.5 billion in Bitcoin of your company, that's a bold, brave move. But you can't deny, the guy is pretty genius. Regardless of what you think of Bitcoin, I myself, I haven't put money in Bitcoin directly because I don't understand it enough. Just something about this move tells me that Elon Musk is so far ahead into the future that we can't even grasp it. Like, the guy knows something that we don't. He has to. I mean, look at his track record with like PayPal, with SpaceX, with Tesla. Sure, there's been some difficulties, there's been some failures along the way, but overall, I think it's difficult to deny that they've been largely successful, that he has been largely successful as a business leader. Is this priced into the share price of Tesla? Yeah, probably to some extent, but honestly, I think the possibilities that could come with Tesla, with Elon Musk, they're endless. Like, we probably can't even imagine some of the stuff that's in Elon Musk's head right now. And I don't think neither him nor his company are going away for a long time. So while they're still around, I believe there's still an opportunity on Tesla. Obviously though, he sabotaged us both with his Bitcoin tweet and I'm now down 17% on Tesla. But I knew that buying this Tesla was going to be a volatile stock, that there was some risk involved and that I would be able to accept the loss should the worst happen. So we'll see what happens with Tesla, but I do think there's still some potential and that Tesla will still be around for a long time. Time will tell, huh? Okay guys, so an okay-ish month. You can see some of the Euro stocks are starting to perform quite nicely. Dividends are coming in that pie, so really nice. Obviously in the ETF pie being held back by that brief downturn in the US markets. Hopefully we'll see that recover over the long term. Should be the case based on the market's history. And when it comes to speculative investing, of course, some big risk involved, and that's hitting me quite hard at the moment. So we'll see how things go in next month's update. So if you enjoyed the video, make sure you hit the subscribe button and turn on notifications so you don't miss the next portfolio update when that comes out. Leave a comment, let me know, how did your portfolio do in February? What are your thoughts on Tesla? Is it a bubble? Will it keep going up? Let me know down below. I'll see you on the next one, and let's get this money.